Okay, quick question for you. If I told you inflation in Canada had dropped to 1.6%, would you celebrate or just roll your eyes at me? Yeah, that's right. I thought so. You rolled your eyes, didn't you? And you know what? I totally get it. But before we dive into this, my name's Myles of the Noack Mortgage Team, powered by Indy Mortgage. And if you get value out of this content or any of my videos, please consider liking and subscribing to the channel so more people like you can see this video. Inflation is officially down to 1.6%, which sounds like great news, right? I mean, less inflation means things stop getting so expensive and maybe even get a little bit more affordable. But, and this is a really big but, most Canadians aren't really buying into this. And I mean, I totally see why. Just last week, I paid over $8 for this really tiny little basket of strawberries for my son. They're already gone. He's going to eat me out of house and home with berries. But if this is what 1.6% inflation feels like, then I'm not really buying into it either. It doesn't really add up to me. So today we're going to dig into why Canadians are skeptical about inflation numbers. And is it a case of good news that's too good to be true, or is there more happening behind the scenes? So pull up your chair, grab yourself a coffee, hopefully one that doesn't take up half your paycheck, and let's dive into this. So first things first, what exactly is inflation, and why do we care if it's 1.6 or 16%? Well, in simple terms, inflation is a measure of how much prices are increasing over time. If inflation is high, everything from groceries to rent starts to cost more, faster than your paycheck can generally keep up. And if it's low, things are supposed to start becoming more stable. So when the government says, hey, inflation's down to 1.6%, they're basically saying, relax, things aren't getting more expensive as quickly. But if that's true, why are Canadians still clutching onto their wallets for dear life? Let's start with the data itself. Governments often use something called the Consumer Price Index, or CPI, to measure inflation. It's basically a big basket of goods and services that are meant to represent what the average person buys. And sure, the CPI might say prices aren't rising much, but there's a catch. And that's what's actually in the basket. Because spoiler alert, if you're not buying bulk amounts of canned beans or taking public transit, your personal experience with inflation might look very different from others. And that's where a lot of skepticism is coming from. Many Canadians are asking, are they measuring the right things? Because the cost of a vacation might be down, but the cost of the basics like grocery, rent, or I don't know, just living in general seems to feel sky high still. So while the government says inflation is down to 1.6%, it doesn't necessarily reflect what people are feeling on the ground. It's kind of like saying the weather is mild while you're standing outside in a snowstorm in Toronto. Technically, it might be true, but it sure doesn't match your reality. There's also the issue of core inflation versus headline inflation. Now, I know, economic jargon, but stick with me here. Headline inflation includes everything, while core inflation strips out the volatile stuff like gas, food prices, and guess what? Those volatile items are the very things that most of us are spending our money on. So when you hear core inflation is low, we're left scratching our heads because gas is up, food is up, and my blood pressure is definitely up too. And speaking of what's keeping costs high, let's talk about some specific areas that are really hitting Canadians hard. Groceries, for instance, have been climbing steadily with supply chain disruptions and climate impacts driving prices up. Rent is another big one. Housing demand is outpacing supply in many cities, leading to higher rent costs across the country. And then there's mortgage costs. High interest rates have been on the rise, and anyone with a variable rate mortgage is likely feeling the pain because of that, despite the drop in inflation. What does this all mean for the Bank of Canada? With inflation being down at 1.6%, and if you strip away rent, mortgage costs and stuff like that, it's probably in a negative, but I mean, that's like stripping down the price of gas and being like, yeah, but what about if you take out the cost of oil? Doesn't really work, but I digress. A lower inflation rate like this could give the Bank of Canada the opportunity to consider these jumbo rate cuts that people have been talking about, where they think they're going to cut by 0.5% instead of 0.25. If inflation is under control, they may feel more comfortable easing up on interest rates to help stimulate the economy. But, and here's the catch, if rate cuts come too aggressively, it could stoke inflation all over again, especially in areas like housing. So it's a really delicate balancing act that they have to do to try and figure out how to pull these rates down without overheating the economy. So what's the deal here? Well, the truth lies somewhere in the middle. Yes, inflation has technically come down, but whether that's translating into relief for Canadians depends entirely on what you're buying, where you live, and what your income looks like. The numbers say one thing, but your wallet says another, and that's why there's so much skepticism. At the end of the day, statistics can be a useful tool, but they're really not always the full story. And when it comes to inflation, what really matters is how people are feeling right now. And right now, a lot of Canadians aren't feeling much relief. Now, when it comes to relief, I know it's not the be-all end-all fix, but we do have a fantastic budgeting tool that I'd be more than happy to send to you. It's an Excel spreadsheet. It's going to do all the math for you, and it's going to give you monthly and annual totals. This is something me and my wife have done. It's really helped us through our life, whether it was when we first moved in together, to when we decided to get married, to when we had our first child. Budgeting and utilizing your cash flow accordingly and knowing what's going to happen, how much you have and how much you're losing per month can be really, really beneficial. So if this is something that you think you would like to have access to, post in the comments below, or by all means, book a chat with me using the link as well. There's a Calendly link, click it, schedule a time. I can share my budgeting tools with you via email. Like I said, simple Excel spreadsheet. Hopefully it can help you out. I know it's really helped me out. All right, now I want to hear from you. Do you think the 1.6% inflation rate is the real deal? Or do you think that it's missing the mark? Leave your comments below. And if you're new here, don't forget to hit that subscribe button. We'll keep peeling back the layers on this economic story, one skeptical glance at a time. Thanks for tuning in and watching. My name's Myles, and we'll catch you next time.